What I expect the market to do from here on out is this. I had a 50 period simple moving average on this chart, on the chart that from my article. I'm going to go ahead and put that on here right now. Again, 50 period simple, and there it is. Now, one of the things that I want to remember when it comes to what we're dealing with on this chart is the fact that I have those blue grab candles, but I have to remember how we got here. And this is going to introduce a little bit of how I have to respect the psychology of the fundamentals. Now, why am I being so specific about saying the psychology of the fundamentals? I'll be frank, I'm a chartist. So by nature, I don't use fundamentals to trade. I use them for timing, for psychology, and for understanding volatility. But I'm not going to be reading in depth into some kind of article in order to use fundamentals to enter the market. Okay, so you can respect something, but you don't have to use it in a specific way. I use charts to enter and exit the market. I don't believe that fundamental stories give me enough information in a timely manner with the perspective I need to generate an entire trading plan. But again, I'm not a fundamental trader. That's not how I'm wired. So I'm certainly not putting that down. There's a lot of options. I mean, some people like the Red Sox. Some people like the Yankees. Both perfectly good baseball teams. I'm a Red Sox fan, right? So, you know, you have your Yankees and fundamentals. You got your Red Sox and your chartists. You know, however you want to look at it. So, what I do want to remember is that even great fundamentalists at some point have to deal with price. They don't talk about it a lot. Some do, some don't. But at some point they have to deal with price because after all, that's how you enter and exit the market. But the emphasis is less, right? So I think the 80-20, the Pareto principle, works here. 80% of my time is going to be spent on sentiment, momentum, and trend recognition, and price, and support and resistance. I like using the 20, 50, and 200 period simple moving averages. I might throw a Fibonacci in there. You know, of course, chart patterns, and I like using other tools. But I've got to respect that 20%. Where's that 20% coming from? One of my favorite things to do is take a look at what kind of headlines are moving the market. And just the headlines. I'm not necessarily interested in what the underlying story is, because while I want to know the broad strokes, I don't need to be told what I should take away from the story, because I think that's where a lot of confusion and difference in opinion comes in. There are a lot of near-term optimistic stories that are bombarding traders right now. And the beneficiary of all that news has consistently been the euro. What has the euro done? Let's respect fundamentals. Let's do respect the fundamentals of what has happened leading into those ECOFIN meetings. The euro does what? It rallies against darn near everything going into those meetings. What else have we been getting? We've been getting expectations of a possible haircut again in Greek bonds. Another what, 50% they're looking at? From 14 billion to 7 billion, so they can at least keep up with their payments. I mean, these are considered near-term positives because there are steps being made to avert disaster. But the iceberg is still in the water, and this thing is still the Titanic. So, I still feel there is an immense amount of bearishness. Near term, a lot of bullishness. Near term, if you wanted to play the bullishness, I think the 15 and the 30 could have been excellent ways, even the 5, to take advantage of the movement higher. Okay, but we're coming out of a downtrend, and I still feel a lot of traders are going to be very, very comfortable positioning themselves at levels of resistance between two levels. One was 30.50, and by the way, I did respect the fact that prices were able to break above 3,000, but the bottom line is, in terms of their breaking above 3,000, once you break some sort of psychological level, what you want to see is acceleration. You know, breaking the level is important. Breaking above, say, 3,000, let's zoom in here, is important because of what we expect will happen next. And that is acceleration. We simply didn't get it. The move was based upon the anticipation of a positive ECOFIN meeting, the positive headlines that were coming out, the expectation of some sort of haircut. You know, all these things were rallying the market. I don't know that it was a true risk environment, because that I'll use the dollar and the Dow to determine. So what I want to do is take a look at two more views. One is, let's look at the dollar and the Dow. And let's also, I want to show you real quickly the pip movement ranges for the euro.